Hello everyone, it's Henry on the live stream. I appreciate you all for tuning in. I hope everyone can hear me and can see my screen very clearly. If you cannot hear me or cannot see my screen very clearly, please indicate so that I can have that fixed before we commence. So in today's live stream, we're going to start by talking about the US dollar and what the market is doing so far. And like I said yesterday, if we're going to see any solid support zone on the dollar, I'd expect that to be this inefficiency resting right here. And so far you can see yesterday price coming to that inefficiency, and after that mitigation we saw a rejection. Thank you so much for your confirmation. We saw a rejection and price came down there again the second time, took sell side liquidity from this low, and after a run on sell side liquidity we saw a rejection afterwards. So personally, like I said, if we're going to continue to the upside on the dollar, I would anticipate for this area to hold as a support zone and then potentially take us to the upside. And like I was talking about the low resistance liquidity as well, you can see how price easily smashed through that low resistance liquidity, dropped below it, took that liquidity, came back down to mitigate this inefficiency resting right here as well. You can see the inefficiency there. So we came back down, mitigated that inefficiency, rejected of that position, came back down, took liquidity the second time, and now we're seeing a rejection. So I'll be watching this very closely to see what the market is eventually going to do, whether we're going to see a rejection or reversal from here to potentially continue higher and then run this low resistance liquidity resting at the buy side liquidity. So that is what I'm watching for the dollar. The next one, we're going to take a look at euro, what euro is doing so far. The key level I outlined yesterday on euro, also going to have a look at that to see whether price respected it or not. And so far yesterday I talked about this key level, I talked about this inefficiency resting right here, and I also talked about this key level. This was the last move to the upside before dropping to break structure, and I said price is either going to come in here. If we're going to go to downside, we'll either see price come in here, run buy side liquidity, mitigate this position, and then we'll wait to see a potential shift in market structure in the smaller time frame. And after that, if we go to 4-hour time frame, I talked about this inefficiency and I said there's still a high probability price might want to come up here to fill this inefficiency and run this buy side liquidity as well. And look what price did eventually, came in there very nicely, and then we're seeing a rejection. So personally, I'm not going to jump into any trade on this one, and the only thing I said was if this is going to continue to the downside, I would like to see a 15-minute shift in market structure to the downside. And so far you can see right here, price created a low, created a high, and then as you can see here, we broke structure very significantly. And after breaking structure, the next key level, if we're bearish, would be for price to come in here. And so far price came in there, rejected, smashed through it, rejected, used it as resistance, dropped to the downside, took liquidity from this low. Now I'm not going to be a seller or a buyer on this one because I don't like the price action, but personally anything can happen from where we are right now. We could see a huge displacement to the downside, because if you look at this low right here, we still have low resistance liquidity resting right here, so there isn't any guarantee that price wouldn't reject off where we are right now and hunt for that sell side liquidity. That can happen, but on the other hand, price can still continue higher because the 12-month time frame has always been bullish. So we're only looking for opportunity to buy this, and right now we're not going to try to buy this from where we are right now because we don't like the price action. The best place in my opinion to buy this, if we're looking at it from the 12-month time, from the monthly time frame perspective, the best area to buy this for long term is in here. but that doesn't mean for guarantee that price will come in there. There's no guarantee for that to happen. But looking at what the market is doing now so far, let's say we're bearish and we want to look for a sell. How would we sell this? A high, a low, breaking structure, came back up, retest, mitigated that position, low, high, break of structure, came back up, this position, 15 minutes time frame, low, high, break of structure, came back up, displaced to the downside. What I would want to see here would be a potential 5 minutes or 3 minute shift in market structure. And right here, looking at it on the 5 minutes, you can see right here, we'll have a low, we'll have a high, we'll have a break of structure, price came back for retest, displacement. So we can still see price come back here again. If I was to look for anything right now on euro US dollar, it would be to sell it. But the reason I'm not going to sell it is because the 12-month time frame is bullish, and I never like to trade against the bigger time frame. The reason I never like to do that is because anything can happen and price can still rally to the upside and continue with the overall trend on the 12-month time frame. But if I was to place a trade today on euro US dollar, this right here is going to be the trade. Entry the inefficiency, stop loss the high. If that works, awesome. If it doesn't, it is what it is. So that is my analysis and what I'm anticipating to see for euro. The next one, we're going to take a look at Aussie dollar. Aussie dollar, irrespective of the fact that I wanted to see it come to the downside for me to buy, you can see how Aussie dollar is consistently pushing to the upside. Now, this is one of the reasons why I never like to trade against the 12-month time frame. In as much as I want Aussie dollar to come to a certain key level, there isn't a guarantee that it's going to come there. In as much as I'm anticipating for it to come down there because it's a discount zone and everything aligns for price to come here, inefficiency, discount on weekly, but at the same time, price can decide to continue higher and not come in there. Why? Because the 12-month time frame is bullish, and anything can be a catalyst to send us to continue higher. The same thing goes with euro. This is the same reason why I'm not looking for a sell on euro. I'm not going to sell it, even though I've marked it out. It looks good for a sell, but I'll never take that sell because it's a high risk trade that could potentially take my stop loss. This is the trade I'm talking about, the euro trade that I just did the analysis. So it's a very high risk trade, this one. That is why I'm not going to put my money on the line for this. It can work. There's a high chance it can work, and this will continue lower to run the sell side liquidity. That can work, but at the same time, it's low probability. And I'm not focusing on any low probability opportunity. I'm only looking for high probability opportunities that align with the 12 months, 6 months, 3 months, monthly, weekly, daily, and then we're looking at the smaller time frame to look for potential entries. And right now, euro doesn't really align that way. That is why on weekly, euro is bearish, on daily bearish, so if we look at the daily time frame, you can see on daily time frame, you can see low, high, break of structure, high, low, high, break of structure, lower high, lower low. So daily is bearish, 4 hours bearish, weekly is bearish. It doesn't really align. This is why I'm really very skeptical taking any trade on euro. I want to see an alignment. For example, if you look at Aussie, Aussie is much more clearer. 12 months is bullish. 12 months is bullish. 6 months is bullish. Now, if we start to scale down to monthly, high, low, break, bullish, weekly. So you can see on the weekly time frame perspective, high, low, high, failed to create a higher high. So we're still within the range low, range high. If we break this low, then we're bearish. But if not, we're still within the indecisive phase. So this is an indecision phase where price is still deciding whether to go higher or lower. In this case, we try not to try to counter trend. We focus on the bigger time frame perspectives telling us bullish. Now, if we look at that, after that, we go to daily high, low, break, bullish. Now, 4 hour, as you can see on 4 hour time frame, you can see 4 hour high, low, higher, low, higher, low, and a higher high. So we've not created any higher low. So there's a high chance price can still continue from here to rally to run the buy side liquidities. Does that make sense? So this is why Aussie dollar is a much better pair to trade right now, in my opinion. It's much more easier to understand. Looking at the structure, you can see the bigger time frame perspective aligning with the smaller time frame perspective as well. But on euro, it doesn't really align. The bigger time frame is telling a different story. Smaller time frame is telling a totally different story. So that being said, I'm going to be on the sidelines for both Aussie and euro. And for Aussie, if we do come in here, I'll look for a buy. If not, I'll still be watching it closely. We'll have a look at Forex Factory to see the high impact news we do have coming out on Forex Factory. Today is Tuesday, 25th of June. 1:30 p.m. we have CPI numbers on card. That's going to bring a lot of volatility into the market. You can see already the previous is 0.5% and the forecast is 0.3%. So far, they're forecasting the interest rate, the CPI numbers to come out lower on card. And this is one of the reasons why you can see a lot of down move on USD card. You can see that USD card has been really violently going to the downside, and I'm not really surprised because with the CPI coming out, the numbers, the forecast is looking, it's negative. So the forecast is negative. A lot of traders will use that information to keep selling USD card. They will keep selling it. They will keep selling it. But at the same time, the forecast being bearish is not a guarantee that price will go to the downside. I've seen times when the actual numbers will come out and then it's higher and then price goes to the upside. Sometimes the numbers are higher and then you expect price to go to the upside and then it goes to the downside. This is one of the things that most traders struggle with when it comes to using the fundamental data to trade on the chart. It's quite complicated a lot of the times. That's why I don't really put too much attention to the fundamentals. I just check what the interest rate is and then check what the market structure is from the bigger time frame perspective, and then I'll look for a smaller time frame shift in market structure to get in. So with that being said, I'll be watching this very closely. Don't forget already my 12 time frame market structure on USD card remains the same: bearish, lower low, higher low, higher high, break of structure creating a lower low. So I believe this is potentially a higher low and then a lower low potentially in the future. That could happen whenever that is. Nobody knows how long it's going to take. This is 12-month time frame. It could take years, even a decade, for price to come as low as this position, because every single candle here is 1 year. So that could take maybe a few years before price will ever come down here. So that is my analysis on USD card, and the next one we're going to take a look at. We're going to take a look at gold and what gold is doing. So far, my key level on gold resting right here. Price expanded, took liquidity, displaced break structure, came back for mitigation, inefficiency, displaced again. So I wouldn't be surprised to see a lethargic price action before another major displacement. Personally, before I engage in gold, I would like to see it come down here. Whenever that is going to be, I don't know. But when it happens, I'll be ready to execute. So this is what I'm watching for gold. And price just keeps bouncing around, coming back and forth, back and forth. It's about a 2% move. Gold can actually do that in a day. So we're going to be on the lookout for that one. Looking at GBP JPY is now clearly in a good zone, and this doesn't mean I'm just going to randomly jump in and start buying or selling. The only thing I'm watching right now on GBP JPY is the fact that if we're going to be bearish on GBP/JPY and go to the downside, I would like to see a significant daily break of structure to the downside. So if I do see that, then I'll look for a sell on GBP/JPY. And this is what I mean. If I do see a break of structure below this low, then I'll wait for a retest to continue selling it. But if I don't see that, simply means I'm going to be on the sidelines for this one and just watch to see what the market will do. And that being said, we're going to look at Euro GBP. Euro GBP just keeps bouncing off and back. Like I said, for me to engage, I want to see it come to this level. Liquidity, low resistance liquidity, and this key level as well is my discount zone. I want to see it come into my premium zone, pardon me. This right here is my premium. This is my discount. We're currently still resting at a discount position, and I'm anticipating to see price come in here at a premium position. Once we're there, I'll look for a potential sell for this to continue to the downside, because overall my market structure on Euro GBP is bearish, and I want to see Euro GBP go to the downside. And another thing to put into perspective is the fact that Euro interest rate is lower than the pound interest rate. Euro interest rate is around 4.5 or something like that, but for the pound the interest rate is around 5.25 or just something similar. So it's higher, and when the interest rate is higher for any particular pair, it's more likely to go to the upside against the other pair. So comparing the two, Euro is more likely to go down than British pound, and British pound is more likely to go up than Euro. That is the reason why I'm looking for opportunity to sell Euro GBP. So I hope you do understand what I mean by that. If you do have any questions, feel free to drop it in the chat. And if you're looking at what the pound is doing so far, mitigated my key level, created a high yellow, broke structure. This is the key level I would have bought from, but for some reason price hasn't gotten to that position. So if you do like the trade, you can place your limit order right here, entry, stop loss 2 pips below this low, take profits, low resistance liquidity highs resting right here. Right here could be you can use the overall low liquidity high resting right here as take profit. There's a 1:7.8 risk to reward ratio, or if you want to be conservative, you can make it a 1:7 risk to reward ratio, taking your profit at this key level and getting out of the market. Because personally, I'm bullish on GBP US dollar, irrespective of the fact that I rarely trade this pair, but a lot of the times my analysis are really on point on it, and a lot of things I do consider before doing the analysis also helps, like the interest rate and all of this stuff. So if you do find this trade interesting, entry right here, stop loss right here, take profit above right here is a 1:7 risk to reward ratio. So that is my analysis on this one. If you do have any questions, feel free to drop it in the chat. And that'll be it from me for the first live stream. I appreciate you all for tuning in, and I'll talk to you all next time. Have an amazing day, everyone.